Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day video. It is the first day of November. Today we're going to take a look at one out of the consumer staple sector, Estee Lauder. Let's jump right in the video. If you want to know more about this company, check them out at www.esteelauder.com. That's www.esteelauder.com. That is their homepage where I pulled this information from. Founded in 1946, this technologically advanced, innovative company has gained a worldwide reputation for elegance, luxury, and superior quality. Our products come with a promise to uphold the finest standards of excellence through extensive research and stringent product evaluation. We are pleased to bring you skincare, makeup, and fragrance products that are both gentle and highly effective. And that's really what they provide. Makeup, fragrances, colognes, perfumes, right? Face care products, skin care products. That is really their bread and butter. And who started this company? I found it kind of interesting. I did not know much about Estee Lauder other than my wife buys some of their products, and they're not, at least I don't feel they're cheap. Joseph Esther Menser was born in New York City. Her parents, Rose Schatz, an Hungarian beauty, and Max Menser, a Czechoslovakian businessman who carried a cane and gloves on Sunday, called her Estee, which was changed to Estee, which is where you get the Estee, right, of Estee Lauder. So it was his daughter when she enrolled in school. The name stuck, but one early detail was never officially pinned down: her birth date. And they never really got to her birth date. But then, fast forward later in life, during a summer spent on Mohegan Lake in New York, Estee met her first beau, Joseph Lauder. So there's the Lauder, right, part of it. And why is it not Lauter? Later, Joe changed his name to Lauder, correcting a misspelling that he had occurred when his father emigrated from Austria to the United States. So basically, the children of two immigrant parents, or four immigrant parents really, who corrected their name. Hers was a nickname and his was a correction on the spelling. So Estee Lauder was not really their initial name whenever they got here. It is a nickname and the correction on the last name of the husband of Estee. So I thought that was kind of interesting for whatever that is worth. Again, if you want to know more about this company, check them out at www.esteelauder.com. Let's keep rolling here. The reason we are looking at them, down 18.9%, huge drop on the day. This is a massive decline for a day. And if you notice here, earnings date was today. So something in their earnings, whether it was they missed revenue, whether it was they missed earnings per share, whether their forecast was dropped significantly, something here is really off. They did something wrong, or the news was negative. Either way you look at it, investors did not like this. Huge decline on the day. Closed out the day at $104.51. We are talking about the Estee Lauder Companies. Ticker EL, again, out of the consumer staple sector. 52-week range as low as $102.22, as high as $283.62. So they are right up against their 52-week low. Average volume, 2.3 million. Today's was 15 million, and that was just a sell-off, right? People are just could not get out of this company fast enough. Market cap, $37.398 billion, a beta of 1.06, so they are just a little more volatile than the overall market. PE ratio, this is very elevated. Price to earnings of $37.59. That is very high, especially for us, Estee Lauder. It's been around, right, as we saw, creeping up on 100 years, definitely over 60 years, so that's almost 80 years. This is a bit high, in my opinion, for this type of company. I get it. Women spend a lot of money on beauty products, but man, that is a really high price to earnings ratio there. EPS sitting at $2.78 per share. Earnings date November 1st. That was today, like we said. So something in their earnings must have spooked investors here. I would look at that if you are interested in investing in this company. See what's going on there. Forward dividend is $2.64. They are a quarterly payer. We'll see that here in a little bit. They have a decent starting yield of 2.05%. Ex-dividend date was August 30th. They paid out on September 15th. So since they've already paid out that last dividend, you would be in line for their next dividend payout if you were to buy them now. And a one-year target estimate of $184.75, at least according to Yahoo Finance. I am not affiliated with Yahoo Finance. It's just one of the sources that I like to go to for information. I like to get into statistics. We're going to look at dividend yield theory and a couple other metrics. And to do that, we go down to their 5-year dividend yield average of 0.94%. We compare that to their current dividend yield of 2.05%, or over here where it says forward annual dividend yield, same number, 2.05%. And since it is higher, that speaks to some potential undervaluation in this one. And it is twice as high. So this one, at least according to dividend yield theory, is significantly undervalued. Now, one of the things I do not like about this, you're going to see a lot of good numbers on this one, but this is one negative that I just do not like at all. Payout ratio of 92.47%. Now, I like 75% or under so that you have room to pay down debt, to reinvest into the company, to make acquisitions, to pay out dividends. I'm a dividend growth investor, so I want a lot of room to make sure that dividend is covered. And when I see 90+% on a dividend yield, that a payout ratio, that is concerning to me. It just does not give them a whole lot of room for error on this one, and it doesn't give them a lot of room to increase those dividends over time. So that is one negative in my opinion. Now, I like to get into the financials. You're going to find a lot of good information here. You're going to look at their balance sheet, their income statement. You can look at their assets over liabilities. You can look at their revenue. Are they paying down debt? What do their margins look like? A lot of good information there. You want to get in there and look at the financials. If you are investing in individual stocks, you really want to understand the company, the financials, how they're making their money. All that information is relevant. For this, we are going to look at free cash flow. We want growing free cash flow over time because, again, that is what dividends are paid out of. And we want growing dividends. So 2020, we looked at 1.6 billion here. 2021 up to 2.9. 2022 dropped down to 2 billion. 2023, a drop again down to 1.5. So that may be part of it. Looks like they have decreasing free cash flow. Never good to see decreasing free cash flow. And they also, if you look here, repurchase of capital stock, they were doing a pretty good job. Almost a million shares here, a billion shares that they are repurchasing every year, 2 billion here. Big repurchase in 2022, but have significantly, so that accounts for some of the drop from 2021 to 2022. This big repurchase of shares right here, that would more than account for that. But this year, they've decreased the amount of shares they're buying back, as well as decreased their free cash flow. So that is not a good sign. That may be part of this big drop down today. Let's keep going here. Now, I always recommend more than one source. So another one that I like is stockanalysis.com. You pick any sources that you like. Just make sure that you are looking at least two to make sure the information you're getting is accurate and that the information you're getting is up to date, right? So any sources that you like, two or more, and then that way you can compare and make sure you're getting accurate information. That is the idea behind that. Stockanalysis.com. I am not affiliated. I am not affiliated with Yahoo Finance. Just two of the sources that I like to look at. A lot of other ones out there, Seeking Alpha, just a ton of them out there. So pick the ones that you like. Just make sure you're not just looking at one source. Now, according to stockanalysis.com, they have 26 stock analysts that have taken a look at this. They call it a consensus buy. Now, they have a low estimate of $137. It currently sits quite a bit lower than their lowest estimate. So it would be a 31.09% increase from where it currently sits if it was to come back to their lowest estimate. They have an average estimate of $192.15, which would be a 83.86% increase. And if it happened to hit their high of $305, that would be a 191.84% increase in the stock price. All the while, you could collect that 2+% dividend yield along the way. Now, I like to get into statistics here. You're going to find the same information, financial statistics, as you will on the previous page. Just presents it in a little different manner and goes back a little bit further in stockanalysis.com than Yahoo Finance does. But I like to look at return on equity and return on invested capital to see how a company is reinvesting back into itself, how efficiently they are doing so. Now, return on equity and return on invested capital, I typically look for 10% or better, and return on equity here is 10.26%. So that meets the threshold there. A bit of a mixed bag because return on invested capital is a little lower than I'd like at 4.60%. So we'll call it a split here between these two. Now, I also like to look at earnings per share growth forecast over the next 5 years. I like 5% or better, and this smashes that. 26.89% forecasted growth over the next 5 years. That is extremely high. And their revenue growth looks nice as well at 7.83%. That's just a bonus that I like to throw in. Now, let's take a look at the dividends. Again, elevated payout ratio, 94.62%. That's concerning to me. Dividend growth at 10%. I wouldn't call that sustainable if this payout ratio is so high and their free cash flow has dropped, unless they think that 2023 is just an aberration and they're going to get back to normal in 2024 and beyond. This is a bit concerning to me. I did go back to 2020. They have been paying growing dividends since 2013, but I only went back to 2020. 48 cents August 28, 2020. They jumped it up November 27th, 2020 to 53 cents. Jumped it up again in November 2021 to 60 cents. Jumped it up again November 2022 to 66 cents, and they've been running that same 66 cents ever since. And I would assume that if they are going to continue this trend, they would increase on their next payout here in November. They do pay out on the March, June, September, December timeframe. So that is what you're looking at here. So overall, pretty good numbers. You know, a little mixed bag on return on invested capital is lower than the 10% I like. Elevated payout ratio, and really elevated, 90+%. That's pretty high. And their free cash flow is a little concerning as well. So this one is, it would go in the maybe bag on this one. I might watch it for another, if you are interested, I might watch it for another quarter and see how they're doing. But they are right up against their 52-week low, so it's at least a good time to start looking at this one and do a deeper dive, see if you are interested in investing in it or adding it to your watch list. Now, this is the vested interest stock screener. This is how I look at companies like Estee Lauder on a high level, right? Understand the business, growing free cash flow, growing dividend payout ratio 75% or less, check valuation based on dividend yield theory. You're going to notice this is the same way I set up the videos, right? Buy below current cost basis or within 15% of its 52-week low, return on invested capital and return on equity equal to or greater than the industry average or 10% or plus. Earnings per share growth equal to or greater than industry average or 5% plus. And for financial companies like banks, I add in price to book here. Must meet 5 of 8 to even be considered investable. For financials, must meet 6 of 9. Well, that is it. Let me know what you think of Estee Lauder. Is it a company in your portfolio? Does your wife or do you use their products? I know, like I said, I have 2 daughters, so I know my wife buys some of their products, and I know that they are in my daughter's medicine cabinets as well, or under their sinks in their bathrooms as well. We have 3 bathrooms in my house, and a lot of times I'm waiting for someone to get out of the bathroom to use it. Just the way it goes whenever you have a house full of women. So that is it on this one. Always appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community, building a community of like-minded dividend growth investors so we can share our experiences, stocks like this, stocks we may be buying, stocks we may be watching, and stocks we may be avoiding altogether. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company you'd like me to cover in the Stock Pick of the Day series, drop it down below and I'll work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money and should never invest any amount uncomfortable losing. Always do your own research and invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.